I would like to use this opportunity to talk about our recently announced Bitcoin future that will launch in December, pending all relevant regulatory review. As the Bitcoin marketplace continues to evolve, we are excited to become part of the ecosystem with the listing of Bitcoin futures. That being said, there are without a doubt issues that we must collectively work through as we develop a derivatives market for Bitcoin. We believe that listing a Bitcoin futures contract on a regulated exchange will provide investors and market participants with the transparency and price discovery needed to pursue risk transfer opportunities that don't exist in the Bitcoin cash market today. So let's talk a little bit about why CME is launching this futures product. What makes our offering unique? And what are some of the risk mitigation controls that we have in place for what will be truly an evolving and dynamic marketplace? We know that our clients and the market are increasingly interested in digital assets. We also know that investors see a lot of benefits on trading on a regulated exchange. To that end, CME has been watching the cryptocurrencies and specifically the Bitcoin market for some time. But we wanted to see if we could provide the risk management tools that would add value to the ecosystem and instill more confidence in those clients who want to participate in the Bitcoin market but want to do so with the benefits of a futures contract and the benefits that CME can provide. So let's talk a little bit about what those benefits of futures are. Futures were created to help businesses and market participants around the world navigate risk and manage uncertainty. Futures allow transparent and efficient price discovery where every day a futures contract trades and settles, those prices are available in real time around the world. Futures allow for risk management. Futures provide the vehicle for traders to hedge existing risks or to gain access and exposure to major asset classes. Those at CME include equity and alternative indices, metals, energy, interest rates, foreign exchange, and the agricultural markets. Futures also provide a regulated environment that many Bitcoin spot exchanges cannot offer today. Futures markets are well regulated, and all futures trades are backed by a clearinghouse. The clearinghouse is the buyer to every seller and the seller to every buyer of a futures contract. This construct helps market participants to significantly mitigate counterparty credit risk. Furthermore, at CME, in our clearinghouse, every futures contract is marked to market twice daily, and variation margin is required to be posted against those marks. This making sure that the gains and losses do not accumulate in the system. These benefits are the strengths of our offering, as is the fact that our Bitcoin future will be cash settled in US dollars against the Bitcoin reference rate. The futures contracts will function and settle the same way as other index futures contracts at CME. There's an underlying index or an underlying reference rate, and we settle US dollars against the underlying index or reference rate observation price at maturity or expiration. So let me tell you a little bit more now about the Bitcoin reference rate, or the BRR, and why I think it sets us apart. We launched the BRR and the CME Crypto Facilities Bitcoin Real-Time Index back in November of 2016, a little over 1 year ago. And we did that to provide price transparency in the spot Bitcoin market. Since the launch, the BRR has created an aggregated view of trade flow of major Bitcoin spot exchanges. From that view of actual transaction prices during the daily calculation window, the BRR provides the US dollar price of Bitcoin at 4 p.m. London time. The BRR is designed around the IOSCO principles for financial benchmarks and the current constituent exchanges that currently contribute the pricing data for calculating the BRR are Bitstamp, GDAX, ItBit, and Kraken. Governance of the BRR is vital to its credibility. The BRR is built from executed transaction data where the once daily reference rate is calculated from Bitcoin transactions on the constituent exchanges that occur between 3 and 4 p.m. London time. This 1 hour window is then partitioned into 12 equally weighted 5-minute windows, where in each one of those 5-minute windows, a volume-weighted median price is calculated from the submitted transactions. And then a simple average is taken across the 12 samples in that 1 hour window. This reference rate determination procedure is carried out every day, Saturdays and Sundays, 365 days a year. In addition to the calculation methodology itself, rigorous checks are performed on the inbound data in accordance with the BRR methodology. Let me give you an example of one of those checks. The volume-weighted median contributed to the BRR by one exchange must be within a 25% deviation tolerance of the other constituent exchanges contributing to the BRR. Failure to meet that deviation tolerance results in the entire constituent exchange dataset being discarded for that day. When looking at the features of the BRR methodology, such as the 12 5-minute windows that are equally weighted, the use of volume-weighted medians, and this plus the 25% deviation tolerance, these all contribute to limit the impact of outlier or aberrant transaction prices in the spot market from impacting the reference rate. This result, the integrity of the index, is what we find compelling about the BRR, and these features collectively increase its resistance to manipulation. Therefore, it is our belief that the soundness of the underlying Bitcoin reference rate methodology, plus the inherent benefits that indexing spot transactions across several platforms provide, is what distinguishes the CME Bitcoin future from other products. In addition to the product and index-specific characteristics, I'd like to talk briefly about some of the controls that we have in place for this new market. As I said earlier, we know there are some issues to work through as the Bitcoin market develops for derivatives. And we are deploying a variety of risk management tools to address those issues, such as higher margin levels, position and price limits, as well as credit controls. All of these designed to appropriately manage the risk of listing and clearing Bitcoin futures. But I do want to expand on one of those tools, price limits, or circuit breakers as they're commonly referred to. As with any futures product based on spot markets, CME has tailored market protections in place to curb excessive price movements. In this case, if the price of Bitcoin futures contract moves up or down 7 or 13%, price limits will kick in to pause the market. It will allow liquidity to replenish, and then trading will begin again. If the price then moves up or down to the 20% price limit in a trading session, a hard price limit is reached. That means Bitcoin futures will still trade, but only inside or at the limit up, limit down price. The futures will not be able to trade beyond that 20% limit price within the trading session. Let's also touch briefly on customer exposures. If we see exposure in Bitcoin futures from any client reach a level that concerns us, CME Clearing retains the right to impose extra exposure limits, additional capital requirements, or other targeted risk management controls. This is not just for Bitcoin, but this is true of any exposures that become a concern in any product or any market at CME. In addition, we have the ability to adjust margin levels and capital levels within the trading session. And those are just our tools at CME. Our clearing members can also collect additional margin or impose additional trading or exposure limits on their clients as well. At CME, we take our risk management role very seriously. So as we embark on this exciting journey of creating a derivatives marketplace for Bitcoin, I wanted to make sure to spend a few minutes today to explain what those protections are in more detail. I hope that I've given you information today on the controls we have in place in our market, the strength of our Bitcoin reference rate, and the reasons why CME Group is now launching a futures contract in this space. I appreciate your time today. We look forward to working with all of you and all of the market participants to launch Bitcoin futures. Our goal is to provide a vehicle that facilitates access and better risk management for the Bitcoin market going forward. Thank you.